It's all because of their hybrid cloud strategy. They're in the perfect position to help enterprises move to the cloud. And that's incredibly important for enterprises right now because it's great for disaster recovery. It enables employees to work together a lot better, suppliers, customers, all because you're moving your IT to a centralized cloud and you can access it much more easily from remote locations. And they make it seamless and easy for CIOs to do this.
It's more than just a short-term benefit for some of these cloud-related companies with more people working from home and engaging on the internet, but also a longer-term implication if various companies now having experienced the possibility of working from home dramatically reduce their office space in the medium to long term.
Absolutely. And what Microsoft said in their press release, they saw basically 2 years worth of cloud adoption in 2 months. And the way this is really a services recurring business model. So the sales they saw now will really continue to pile on over the next kind of couple of quarters. So they should have a very few good quarters ahead of them and, frankly, longer term, a good decade ahead of them. And we also surprisingly saw quite a bit of operating leverage in the model this quarter, despite all the disruption. And I think we're going to see a lot more of that over the next couple of quarters because it's actually a little difficult for Microsoft to spend anywhere near the level that they're seeing on the revenue growth. And they basically have the infrastructure in place that's highly scalable with massive amounts of operating leverage.
Mike Santoli in the conversation as well. Mike, this was one of the outperformers. The fact that it's actually now gone positive for the year 2020 shows you about where the market thinks this stock has been. And the fact that these numbers just proved it. In the line, there's a line in the press release that says COVID-19 had very little impact on our revenues. You don't see that across many companies right now.
And you know what you also don't see, what's probably surprising to most people, that the largest stock in the market after hours is trading only 4% below its all-time high from a couple of months ago. And that all-time high for Microsoft, by the way, represented a pretty high valuation relative to its own history. And it seems like it was the can't lose, everybody loves it, bulletproof stock. So that just tells you what an exception to the overall kind of macro picture and the broader market that this company is. And, you don't want to say that that somehow the market is being too optimistic here, because it really is keying off of what's happening in the business and with a view to what might or might not change. And it seems like not that much has changed.
And so, Tim, the stock now is up about 15% year to date. What are you going to be looking for in the call, and how will it inform what your current recommendation on the stock is, which is what?
Oh, we do have a sector outperform of the stock with a $195 price target. The call is critical. We're looking for body language. We're looking for guidance for the second quarter. And that body language and guidance is really going to dictate what happens to the stock tomorrow. They do have some businesses that can potentially be under pressure. They have a little bit of advertising revenue. They obviously sell some hardware to consumers. LinkedIn could maybe see a little bit of a slowdown. So I think they're going to be cautious on the guidance, but they can only be so cautious versus the results that we're seeing here. I mean, they just beat earnings by 10% on a very widely followed stock. And, we think what they've said here on 2 years worth of cloud sales in 2 months, this is really going to build up into very strong revenue the next 6 months with very high operating leverage. I'm sure they'll be cautious, but they're not going to be cautious enough for us to really reduce the stock price.